Greetings everybody, Sive here with the Forex Peace Army.com. Let's have a look on the gold market now. So in general, you can see that market is keep going lower. Last week on Thursday, on Friday, we said that we see signs of weakness surrounding in performance on lower time frames and ability of the market to pass through the tops. We talked about this many times, you probably remember that. And as a result of this suggestion, our trading plan in the weekend was suggesting the considering taking the short position. So, but performance was a bit stronger, and we haven't got the pullback for entry that we planned to have. So I will show you this a bit later. Currently, speaking about overall general picture, it works absolutely fine. If you remember, we talked about the volatility breakout pattern on the weekly, and we suggest that if this pattern will work properly, market should drop back to the 41 area, back to the lows. Reversal started exactly at the level that we suggested, which is a 618 retracement. Now you can see this performance is accelerating, the market action is accelerating. Nearest strong support area here will be around 44, which is actually a major 618 level. But this is still a long way until this level. Let's see what we could do today, what is happening right now on lower time frames. On the fall time frame chart, you could see the market has broken our confidence area that we talked about, although it spent some time here around it, testing it. Now it's going lower. The nearest target to the downside will be somewhere between 45.55, 45.79. Also, if you check this target, which is A, B, C top, it exactly stands at the same 45.56 point. So somewhere around 618 support here will be next destination point of this downside action. On the hourly chart, you could see that hand shorts, and if you remember, we talked about possible hand shorts pattern. So we said that this pattern could trigger the pullback, and if we will get it, that might be a good chance to consider taking the short position. And initially, everything started really nice. So you could see that with the gap down, shoulder has been formed, market has shown good performance, but later the pattern has failed, and now we're dropping below it. So if you would like to take the short position, currently you do not need to consider fast ending resistance levels from this top or from that gap. You need to use nearest levels, just because normal bearish market should not return back in this tight consolidation. It means that the most proper retracement that you could try to use stands around 4670. 4670, 4680, or even smaller. So maybe even just minor pullback you could use. That is some kind of your invalidation point for this minor trade. Just because if market returns back up, it means that something has changed, and it will return back in this consolidation, which suggests even further upward action. Normal bearish market should not return back. It could retest it. It could show a minor pullback here, but it should stay outside of this range. That's why if you plan to take the short position, you do not need all the levels that stands inside of this range, only this one or even smaller. So that's actually, in fact, what we have. Now we just could keep an eye on the downward action. Those of you who would like to take short position could consider this with the scenario that we have discussed. Next, more or less significant chance for position taking might appear when the market will hit this 45.60 area. It will be support, so maybe here might be a bit stronger retracement, we will see. But obviously currently overall context remains bearish. Everything is going with the weekly pattern, which is great, and potentially it is interesting because, well, this target around 41, it has really a long way to go, and we could get the direction for 1, even 2 weeks of trading, which is really great.